The market's in an itsy-bitsy little gully right now. It's like everybody said, okay, that was crazy, let's just all calm down.
Good to see you guys again. Hopefully you guys are doing well. And today I'm gonna bring you guys 3 different ways that you can invest your money outside of stock investment. Welcome to SimpleChew. I'm your host Hank. And if you're into investing your money, personal growth, or how to develop or create a resale business, I suggest you to subscribe as I deliver videos every week. For the past couple of months, I've been beating you guys on why you should invest on the stock market, how to invest in the stock market, the steps you have to take before you can invest in the stock market. As a lot of people can see nowadays in the news, the stock market is kind of getting a lot of riskier to invest now. It's always been risky, but when the economy is booming, the stock market usually booms at the same time. But as the economy is slowing down a little bit, the stock market is becoming a little more risky. People are losing some money and they want to look other ways to invest money. So let's go through it.
Best thing I've seen in the last 6 months.
Tip number 1, C.Ds, bank C.Ds, certificate deposit. They're super secure savings accounts that you can get a good return on your money. You're not gonna get rich out of
comes cash, tons of it.
The best rate you can get on your money is 3% interest rate. You need to check on the bank, on the specific bank that you're trying to invest, to see if they are getting you interest rate monthly, quarterly, or yearly. Most likely is yearly, and the best one that I've seen is 3% from Capital One. There's a whole range from 1% to 2.5 to 2.6%. So you need to do a little shopping on the bank that you're trying to put your money. All these banks have a minimum balance too, so you have to. Some of them you have to put like $500 to anywhere from $15,000 to $30,000. And some of the things you need to realize is that once you decide to put your money on a CD, your money is locked, depending on the term that you sign in. A lot of banks recommend 6 months to 5 years, and it's for their benefit because they're gonna be using your money and then they're gonna pass some money to you at the same time. But you're not getting the same rates that the bank is gonna get as they use your money. But it's one way to not have your money in the savings account that gets 0 interest, and it's super secure. And also, when you're looking for a bank, look for our bank that is really stable. Don't look for a bank that it might go bankrupt, even though some of your money will be insured by the bank. Tip number 2, buy AAA corporate bonds or treasury bonds. They work the same way as the CDs, where you expect the interest yield coming in every year, depending on the term of the bond. But I always suggest you to buy AAA. Don't go on the B rating because it gets more riskier. So a AAA will get you anywhere from 2.5 to 3% yield, interest yield. But a treasury bond will get you even less. It can give you like 1.2. But the thing is with corporate bonds and treasury bonds is they're really liquid. So if you one day you don't want them anymore, you can sell them. It's different from the CDs where your money's locked as a savings account, whether you're gonna receive this interest rate, but that's your money. You can't sell that CD. It has to be there for the year or the 5 years that you decide to put it on that bank. On the corporate bond, it works the same as the CD, whether you're gonna receive an interest rate, but you can sell it anytime. And corporate bonds and all these treasury bonds, they can go from 5 years, where you're gonna receive 5 years of interest rate, to 10 years to 20 years. And also you can buy them as a premium, or you can buy them as a discount, meaning that a bond could cost $10,000, and as just how it is. But if it's like an Apple bond, and you might have to pay a premium for them. So you might be paying $12,000. At the end of the 10 years, you only get $10,000. But so it all depends on I can go more in detail how to buy bonds, but bond works the same as a CD, but it's more liquid if in 2 years you decide, oh man, I need the money, you can sell. Tip number 3, and this is my favorite way of investing the money away from stock market, is through peer-to-peer lending or micro lending. Micro lending, you are lending your money to somebody else over the internet. Most likely you can do it person to person, but it gets a lot complicated. You need lawyers. But through the internet, like websites like Upstart is one of the websites I'm using. Kiva, I think that's how you pronounce it. I will put a website list of the micro lending or peer-to-peer lending. So you're helping people with your loans. So some people need your money to invest on their business. They need a new equipment, or they're starting a business and they need some starting money, or they're trying to fix their credit and they want to have one payment. And it's a great way for you to make money too, because you get an interest rate on the money that you lend them, and they are the person who are gonna give you the money. Whoever you lend it, they're gonna give you the money. It works through the FICO score, the credit scores of each individual. So the higher the score, 700s and up, the less interest you're gonna get, because the most likely they're gonna pay you, and the less, 600s and less, more risky, you're gonna charge them a lot more interest rate, but there's more chances of them defaulting and you losing your whole money. So I always stay on the 700s and up. Secure money, I've been super successful getting my money back on the 720s. Not guaranteed, but I've been getting my money in the 720s. The interest rate is not that great, but it's way better than the bonds and the C.Ds. They're around 6 to 7% depending. And then you have to pay fees on the website that you're using, this micro lending. Super easy to use. The only thing is, don't put more than $5 grand in. That's my only recommendation. Don't go crazy. And you can always reinvest that money. Thank you guys for watching. Hopefully you guys are not stuck in the stock market and thinking that's the only way you can invest your money. There's always different ways to invest it. And hopefully the 3 tips that I give you today opens your mind to different ways and possibilities to make a little cash. Today's tips are not gonna make you super rich, but it's gonna make you beat the inflation on your dollar. Don't forget, guys, to follow me on Instagram, Facebook, and Twitter at SimpleChew. Like the video and share it with one friend. And remember, keep it simple.